Store closures are shocking the United States. Saks filed bankruptcy. Macy's announced more closures. Joann liquidated. Express filed. Big Lots, they're gone. Party City, finished. Moody's just downgraded the entire sector. Do not take this lightly. Let's get into this.
The store on the corner of your street closed. You drove past it a few weeks before you noticed the lights were off for good. Then the one near your grocery store. Then the anchor tenant at the mall your kids grew up in. Bad luck, you figured. Bad lease, bad location. It isn't bad luck. It's the fastest collapse of American retail real estate in more than 30 years. And it follows a sequence that has run before. A national chain fails. Its stores empty out. The anchor tenant of a shopping center goes dark. The smaller stores around it lose their foot traffic and follow it out the door. The value of that commercial property falls, 30 to 50% in the worst cases. And when commercial property values fall, the property taxes that fund your town's schools and roads fall with them. 6 steps. The first one is a store closing. The last one is the value of your house and the budget of your kid's school. You don't have to have ever shopped at any of these stores to take the hit. That's the part nobody is telling you, and it's what this video is about. Start with the size of it. By the 6th week of this year, US store closures had crossed 2,000. New store openings are running 47% below last year. The full year projection is around 15,000 stores closing. 15,000 is not a normal bad year. Retail has had bad years. The dot-com bust, the 2008 crash, the stretch around 2019, the press called the retail apocalypse, when something like 9,000 stores closed. The record was 2020. The pandemic shut down the country and roughly 12,000 stores didn't survive it. That was the worst year American retail had ever recorded. The projection for this year is higher than that, higher than the pandemic. And there's no pandemic to point at this time and no reopening to recover into. That last part is the whole story. In 2008, in 2019, even in 2020, a closed store was a temporary hole. Other chains were still opening locations. A space went empty and within a year, somebody leased it. With openings down by nearly half, that's gone. A store that closes in 2026 mostly just stays closed. The hole doesn't fill. 2020 was a bigger shock at the time, but it had a recovery waiting on the other side. This doesn't. The people watching their own towns saw it before the numbers did. One subscriber wrote in that the malls are all going, that the social part of shopping in this country is dying, and soon it'll be empty buildings with no one in them. Another wrote that the middle class is dissolving. Another said a bag of coffee now runs them $20. Not analysts, people standing in zip codes already partway through the sequence. Thank you to everyone writing in from inside it. That view is ahead of the official numbers every time. Here's what's actually closing. Saks filed for bankruptcy in January. Francesca's filed in February and is closing around 400 stores. Eddie Bauer is winding down about 175 locations. 7-Eleven announced 645 closures. Macy's is closing 150 stores, which leaves it with around 350 nationwide. Pizza Hut closed hundreds of restaurants. Wendy's is shutting close to 350 in the first half of the year. Starbucks announced around 520 across North America. QVC's parent company filed bankruptcy in April. S&P Global says first quarter retail bankruptcy filings hit the second highest level since 2010, since the depth of the financial crisis. Moody's cut its outlook on the whole retail sector to negative, and its lead analyst said the industry's prospects are bleak. The pattern week to week is what tells you it isn't slowing. Week 2, Saks. Week 6, closures past 2,000. Week 13, openings down 47%. Week 15, the 7-Eleven announcement. Week 17, a kitchen retailer shuts every UF store it has and leaves the country. That's not a season, that's a curve bending the wrong way. Step 1 is the bankruptcy or the mass closure announcement. That's done. Saks, Francesca's, Eddie Bauer, QVC, 7-Eleven, Macy's, all confirmed. Step 2 is the liquidation. The going out of business sale clears the inventory and lays off the staff. Francesca's is doing it now. Every cashier and store manager whose paycheck got spent in the same town they worked in, that money is out of that local economy. Step 3 is the vacancy. A failed chain doesn't empty one store, it empties 2, 3, 400 at once. Stack 6 big bankruptcies and a dozen closure programs, and you get thousands of empty retail spaces hitting the market in the same few months.
Hey everyone, real quick, sorry to break in, but if you are wanting to take advantage of this real estate downturn as the economy gets worse, I put together a group of 4 courses: the real estate cycles course, the real estate bear market course, home seller pro, and so much more in the last one. I'll keep that one a secret. Links down below, one price for all the courses. I want to blow away your expectations. Now let's get back to the video.
Step 4 is where it stops being a retail story and becomes a real estate story. A strip mall is built around its anchor, the big tenant that pulls the traffic everyone else feeds on. When the anchor goes dark, the traffic collapses. The nail salon, the phone repair counter, the sandwich shop can't hit their numbers without the crowd the anchor brought. They leave. And here's the part that traps the ones who stay: the cost of running the building. The parking lot, the lighting, the insurance gets split across the remaining tenants. Fewer tenants, bigger share each. So rent goes up inside a dying building. Step 5 is the property value, 30 to 50% down in the worst corridors. The owner who borrowed against the building's old appraised value is now holding something worth half the loan. Every comparable sale on that block resets lower. Step 6 lands on people who never signed a lease in their lives. Lower commercial property values mean lower property tax revenue. Schools get squeezed, road repair gets pushed back, services thin out, and housing demand in that zip code softens because nobody wants to buy into a town with a hollowing tax base and a worse school budget. The homeowner who never set foot in a Francesca's is now sitting in a house worth less than it was the day before Francesca's locked its doors. This sequence has run before, and that's the useful part because it tells you how long it lasts. 1990, 1991, the savings and loan crisis took down hundreds of lenders. The recovery took 5 to 7 years in the places hit hardest. But 1990 had something 2026 does not. Back then, the empty buildings eventually got new tenants because retail was still expanding somewhere. The pipeline existed. Now, it doesn't. Openings down 47% means there is no second retailer waiting to take the Macy's space. Moody's is projecting corporate defaults in the riskier tier, running as high as the 8% range later this year. The bankruptcy list is not finished. So here's what to do this week while the information still has a head start on the going out of business sign. Find out which national chains anchor the shopping centers in your zip code, and check whether any of them have filed or announced closures in the last couple of months. Pull your area's commercial vacancy rate. The commercial real estate firms publish it by metro. A strip mall corridor above 15% vacancy is the early signal that the empty anchor is not getting replaced. Above 20%, the property values are already resetting. Pull your county assessor's commercial property tax data. It's public. A falling commercial tax base shows up there 6 to 12 months before it shows up as a school board cut in the local news. By the time the cut makes the paper, the vacancy that caused it has been climbing for a year. The closures crossed 2,000 by week 6. They'll keep climbing every week the rest of a year because the openings that used to refill those spaces are down by nearly half, and nothing is coming to reverse it. The numbers come out every week, the tax base reports every quarter, the vacancy rate posts every month. All of it is public, and all of it is months ahead of the moment the lights actually go off on your street. The only question is whether you're reading it now or finding out later. This has been a look at the great retail collapse. Stay informed and stay prepared. Economic Ninja is out.